Hello, everyone, and welcome to this episode of Getting Technetical with Technetics. I'm your host today, Tyler Kern, and today on the episode, we're discussing commercial aerospace trends for 2022. So we're casting an eye forward, as well as putting it in proper context, putting these trends in the proper context of what's been going on in 2021. And joining me here on the show today is Jason Riggs. He's the Director of Strategy for the Americas at Technetics. Jason, welcome to the show. Thanks for joining me.
Hey, good to see you, Tyler. Thanks for having me.
So Jason, as we look at the trends looking ahead to 2022, let's start off by talking about demand. Obviously, demand tailed off quite a bit during the pandemic. Let's talk about whether or not you see demand reaching pre-pandemic levels once again as we look forward. Start us off there.
Yeah, it's a great question. So we do fully expect that the commercial aero market will return to pre-pandemic levels at some point. The question, of course, is when. What we do know is, at the worst of last year, globally, traffic was down about 80%. As we sit today, globally, daily departures are back to about 70% of pre-pandemic levels. So we're only down by about 30% globally. The US is only off by about 7% of pre-pandemic levels. On the other hand, China is still down about 50%, and Europe is down about 30%. So we really anticipated kind of entering a strong comeback period right now for Europe, particularly with their winter travel season. But of course, this new COVID-19 variant has created some uncertainty and certainly some headwinds for cross-border air travel, which is definitely challenging to Europe's recovery. On the other hand, there's a lot to be excited about in the market right now. The business jet market continues to perform really well, and it really has stayed strong even through the pandemic. The 737 MAX, which has been grounded for safety issues in China for quite a while, was just recently given the green light to start flying again, and that's really meaningful for that market and for Boeing. On the other hand, this ever-evolving virus creates certainly some uncertainty and some headwinds. So, with all that being said, yes, we do expect the market will recover. We do expect it to be lumpy because we just don't know how some of these things will play out. But we're still looking at that kind of 2023, 2024 timeframe for a full recovery to pre-pandemic passenger demand levels.
One of the other things that has been rumored are production rate increases. Do you believe that those projections are going to come true? Are those real, these production rate increases?
Well, it's a hot topic for discussion right now. What we do know is the airframers, i.e. Airbus and Boeing, particularly Airbus, are making some pretty bullish calls. The engine makers don't necessarily agree. You have people like Safran who have been very public in kind of pushing back on some of the projections from Airbus. So it's difficult to know where the truth lies, but we do know that the airframers and the engine makers are kind of on two different pages. What we've seen from Airbus is they're calling for production rates somewhere around 75 per month in 2025, which, just as a point of reference, that's about double where we stand today in terms of production output. Is it real? It's hard to say. We do know the market's recovering. We do know Airbus is well positioned to capture some of that market, but there's also speculation that they're kind of putting some of these lofty goals out there as a way to put pressure on Boeing, who's kind of fallen solidly back into second place after having kind of a 50-50 duopoly for a long time. So we just don't know where that's going to go. We do know that rates are increasing. We do know that it's going to create both challenges and opportunities for the supply base. So, for folks like us at Technetics, we're preparing one way or another, but where we actually end up in terms of true output is still kind of TBD.
I would assume that with people kind of differing on those projections, that makes it difficult to project forward for the supply base, right? What does all of this mean for the supply base and all of the uncertainty that maybe is wrapped up in that situation?
Well, there's a lot of reasons to be concerned about what that means for the supply base, how the supply base is going to be affected. What we do know right now is we'll just say the aerospace and defense supply chain is already stressed. And certainly, increasing rate is going to create more stress and strain on the supply base. Kevin Michaels from Aerodynamic Advisory recently reported in Aviation Week that skilled labor, from his perspective, has emerged as kind of the main supply chain challenge. We know that there were major layoffs throughout the industry in 2020, and a lot of suppliers in the aerospace and defense supply chain are having a difficult time recalling some of those employees that they need to be able to expand capacity. I've heard it said that within the supply chain, that the workforce is about 10 to 20% smaller from where it really should be today to support current demand, as well as some of the near-term ramp. So the question then is why? Why are we having such a hard time maintaining and growing the workforce? And there's a few hypotheses that have been thrown around. One is younger people are finding opportunities in other industries where they can get competitive wages. So perhaps their interest in aerospace has kind of declined. The other challenge that we know is very real is, vaccine mandates that kind of vary state to state. Particularly if we look at key aerospace cities such as Wichita, Phoenix, Fort Worth, Savannah, Charleston, et cetera. These are cities that have a lot of key suppliers, but these are also places where, vaccine levels are somewhere in the 40, 50, maybe high 50% range. So, in cities like that and places like that, where if you have, we'll say kind of mass resignations due to vaccine mandates, it's really challenging for a supply base that's already struggling. And the last thing I would just note in terms of the challenges for the supply base is really a shortage of key inputs. So if we think about castings and forgings, those were a problem before the pandemic. If you're building assemblies that rely on investment castings and such, you were struggling before the pandemic, and that situation certainly hasn't gotten worse. And now we're hearing about chemicals and adhesives, for instance, being in short supply. Certainly, everybody's well aware of the semiconductor and chip shortage. So you've got labor issues, you've got input issues, and you add to that increasing rate. It's definitely going to create stress within the supply base. It's a concern from a commercial aero standpoint, and it's also a concern for the defense complex, who relies on the same supply chain to kind of support the warfighter. So this is definitely something that's getting a lot of attention right now.
So then, Jason, broadly within the aerospace and defense supply base, so what are some of the other trends that you're seeing? Is there anything else that you want to bring up kind of along those same lines?
Yeah, well, there's certainly a lot of reshaping of within the supply base. So, for instance, for a long time, this idea of large conglomerates had kind of been in vogue, and as we're seeing now, that's no longer the case. So, if we look at GE, they've announced that they're going to split the company up into smaller groups. We suspect that that's going to continue. That's kind of where the pendulum has swung at this point. The other thing we're seeing as a supplier is a lot more interest from our customers in dual sourcing, and the thought there being that that's one way to kind of mitigate against continuity of supply concerns. It's also potentially another way to drive costs down. Again, that's the theory. In my career, what I've seen is that pendulum tends to swing from a single source strategy to a dual source strategy every few years. And in my experience, that dual source strategy may look good on paper, may be attractive to supply chain organizations, but doesn't typically deliver the kind of benefits that OEMs and tier ones anticipate. But nonetheless, that seems to be kind of where some of our customers are interested in playing right now.
What about with mergers and acquisitions within the aerospace and defense landscapes? What are you seeing in that area as well?
Yeah, so in 2021, we saw a lot of defense-related transactions. There's an old adage that defense is defensive, and basically what that means is, defense-related content typically stays strong through downturns, and that was certainly the case during the pandemic. The commercial aero sector took a big hit. Defense stayed pretty stable. So a lot of acquirers became more interested in defense-related assets and businesses than they were before the pandemic. And so naturally, there were more defense-related transactions, which was a bit unusual versus prior years, but that was certainly the case in 2021. What we're seeing now is there's a lot of liquidity in the market, a lot of dollars chasing few deals, and therefore valuations have continued to increase. So businesses that are trading at multiples that are, significantly higher than they were maybe just a few years ago. So looking forward, we expect more commercial aero deal flow, particularly next year. You have a lot of businesses that weren't performing well over the past year, maybe had been interested in selling, but certainly weren't in a position to do so. So they kind of pulled back, battened down the hatches, kept operating the business. And now they're at a point where business is looking healthy, balance sheets look good, and we expect some of those businesses will be coming to market. And then going back to my earlier comment about, conglomerates kind of being no longer the flavor of the month, we expect you'll see more portfolio reshaping, divestitures, carve-outs, et cetera, as companies continue to either split up assets or shed kind of non-core assets. So that should create opportunities within, particularly within the commercial aero sector, and again, should increase deal flow in 2022.
Excellent stuff. Excellent stuff. Jason, as we begin to wrap up our conversation here today, do you have any final words, anything you want to leave our audience with here today, just in terms of summaries or closing the books on 2021 and looking ahead to 2022?
Yeah, so 2021 was quite a year. We feel really good as Technetics and Enpro about where we are at and our ability to support as the market returns. Certainly, I think for the broader aerospace and defense market, there's certainly some reason to be concerned about key suppliers within the supply base. I know that's getting a lot of attention at different levels of industry and government. So, hopefully that all pans out and we can, keep key suppliers engaged and ready to support the ramp. We do know that the fundamentals for aerospace and defense still remain strong. We do know that these markets will continue to recover. And we do know we'll reach pre-pandemic levels. It's just a question of how and when. But, we feel really good about the market. We're excited about where the things are going. There's a lot of growth opportunities ahead, and we're excited to support.
Excellent stuff. Jason Riggs, Director of Strategy for the Americas at Technetics. Jason, thank you so much for joining us here for this episode of the show.
Thank you. Appreciate it.
Absolutely. And everyone out there, thank you for tuning into this episode of Getting Technetical with Technetics. Of course, for more, you can visit Apple Podcasts or Spotify to get up to date with the latest episodes of the show, to keep up to date with everything going on at Technetics. Of course, you can also visit the Technetics website for more there as well. And you can subscribe to stay up to date with the latest podcast episodes and so much more. Make sure to do that because we will be back soon with new episodes of the podcast. You don't want to miss those. But for this one, for my guest today, Jason Riggs, I've been your host, Tyler Kern. Thanks for joining us.